all. Welcome back to another episode of the Enrich Your Journey podcast. I'm your host, Patrick Monahan, Senior Wealth Advisor here at Trilogy, headquartered in St. Louis, helping folks all across the country with their investment management plan and financial plans. Wanted to hop on here today. It's kind of a quick one. Want to be relevant with it. We've just had a significant tax bill that was passed recently. And so I just really wanted to take, this is a short one, maybe 3 to 5 minutes to walk through some of the key components of this plan. From what I've read so far in the just over a month that it's been out, there are almost a component of this plan that can affect almost everybody as I've read through it. So the goal today is hopefully if you can take 5 minutes to watch this and one or more of these items affect you that could positively impact your tax situation. That's the goal of today's episode. It is called the One Big Beautiful Bill Act. And so with the recent passage of this act, again, I just want to take a moment to inform you all of several key updates to the tax code that could be relevant to you. Again, I believe it's important for you to be aware of these developments as one or more could positively impact your tax return and your future. Not all of the changes or tax law will apply to your individual situation, but I've attempted to highlight the most significant and impactful ones for your awareness. As I mentioned, this act was just signed into law 41 days ago on July 4th, so it is still pretty new, so please reach out if you have any questions. In the interim, we'll continue to digest this nearly 870-page law. So let's get into it. Number one. Probably the number one that we get asked the most from clients, prospects, family, and friends are just tax brackets. These were due to be reset to higher limits starting in January. Tax brackets are now permanent. So instead of 39.6% top tax rate returning January 1st of next year, the top rate will now remain at 37% as set in the Tax Cuts and Jobs Act of 2017 and include the following for individuals, trust, and estates. 10%, 12, 22, 24, 32, 35, and again, 37 being the highest bracket. That does typically lower each bracket around 1 to 2%. And so obviously thus reducing your taxes at each bracket. Number two, the standard deduction increases. So this is for all folks that claim the standard deductions or not itemizing. Without the passage of the One Big Beautiful Bill Act, the standard deduction would have almost been cut in half. So now the new amounts for 2025 are single filers $15,750 that you can deduct just right off the top as a standard. Head of household is $23,625, and married filing jointly is $31,500, which is up from $30,000. So again, starting next year, January, those standard amounts that for folks that are not itemizing their deductions would have been almost about half of where they are since this law has now been passed. Number three, another really important one that comes up a lot is what we call the SALT deduction or the state and local tax deduction. It is increasing. This will affect many of you who have property taxes greater than $10,000 and you itemize your deductions. So if you are in a high property tax state, this very likely will impact you. So the SALT deduction cap is increasing from $10,000 to $40,000 effective this year through 2029. So obviously a significant change there. Again, going from $10,000 you were capped, now you'll be capped at $40,000. So think property tax on your home. If your home's property tax is $20,000, you were missing basically half of that property tax last year. Now you'll be able to realize that whole amount up to $40,000. Number four, 529 plans. A lot of clients are in these. We get asked about these a lot. These are fantastic ways to save and pay for educational expenses. The annual expense limit for K through 12 qualified expenses is increasing from $10,000 to $20,000 starting next year. Also, the expanded list of qualified expenses that can be covered is much larger now, includes things such as books, online educational materials, and tutoring outside of the home. So again, expense amount goes up. What you can pay for is expanded. Also, funds can now be used for post-secondary credentialing programs offered by trade schools and other institutions. That was a big one in the new law. That was not in there before. So any trade school, you can now use 529 monies, which again could be funded from grandparents, other family members. So really take the time to understand 529s because they are even more flexible than they were before. Number 5, child tax credit. The tax credit is increasing $200 per child starting this year, and it will be adjusted for inflation going forward. Number 6, estate, gift, and generation skipping transfer or GST tax exemption amounts have also increased. Lifetime estate, GST, and gift tax exemption will increase from $13.9 million to $15 million in 2026 per individual, also indexed for inflation, or $30 million per couple. It's important to note that with the passage of this act, this total exemption amount per person was set to be decreased at the beginning of next year down to $7.14 million, or less than half of what it now is as a result of this new law. So the ability to pass on your estate, the ability to gift throughout your life is now $15 or $30 million for a married filing jointly couple. Pretty significant change there. Number 7, deduction for qualified residence interest. The law permanently extended the Tax Cuts and Jobs Act limitation of qualified resident interest deduction for the first $750,000 in home mortgage acquisition debt for those who are itemizing their tax return. Notably, the new law also permanently disallows deductions for home equity loans. That's a big change, unless the loan proceeds are used to acquire or improve your principal residence or a second residence. So typically, home equity loans were pretty liberal on how you could write off that mortgage. Now it explicitly has to be used on your primary or secondary home for acquiring or improving those homes. Number 8, this is a brand new one. Enhanced deduction for seniors. If you are 65 or older by the end of this year, you will get up to an additional $6,000 federal income tax deduction per person. That's effective this year through 2028. This deduction phases out at incomes of $150,000 for couples or $75,000 for others, and notably may be taken whether you're itemizing your deductions or taking the standard deduction. So again, pretty big one here. If you're making, let's say you're retired, married couple making less than $150,000 with Social Security and all your other income, you basically just get an additional $6,000 as a deduction, whether you're itemizing or taking the standard deduction. Number 9, another new one, a charitable deduction for non-itemizers. Typically used to have to itemize for deductions, charitable deductions, but starting in January 2026, even if you do not itemize, you can now deduct up to $2,000 in charitable donations. Single filers, $1,000, married filing jointly, $2,000. So that's a big one too. We have a lot of clients that and prospects, family and friends that are charitably inclined, but a lot of times the tax benefit question comes up, and if they were not itemizing, wouldn't have been a benefit for them in the past. That is now not the case, where they can write off either $1,000 if you're filing single, or again $2,000 married filing jointly, even if you're taking the standard deduction. Number 10, a lot of buzz around this one, the Trump account for minors. A lot of discussion around this one, a lot of questions around this one. This is a new type of account for children under 18 with annual non-deductible contributions up to $5,000 that can be made by parents, relatives, or other taxpayers. Notably, the IRS will also make a one-time contribution of $1,000 per child born in between 2025 this year through 2028, beginning on July 5th of next year. So this can be massive future growth for children to start a tax-deferred type account. Funds become available penalty-free after age 18, and they're taxed like a traditional IRA. Also interesting, employers can also contribute up to $2,500 to an employee's Trump account, which counts against the $5,000 total annual limit. So very likely will be some employers, maybe as a retention tool, making contributions to those accounts. Just know that comes off of your $5,000 that you can contribute to that account for the benefit of the kids. Number 11, also a new one, no tax on overtime and tips. Technically, it's a deduction rather than no tax, as there is still FICA taxes due on this money. The new deduction is for tips and overtime pay as listed below. Single filers up to $12,500, does phase out on modified adjusted gross income of $150,000, or phased out up to $25,000 on income of $300,000 for a married couple filing jointly. So that's another big one there of a tax saving strategy on the no tax on overtime and tips, obviously up to those limits. And so, again, just wanted to really point out those 11 really quick ones. I know we had a few new ones at the end. Please feel free to go back and watch those again. The new ones are probably creating the most questions, confusions, buzz, if you will. We're happy to answer any questions about those. But, again, the goal of this episode was just to make you aware of the top 10 and 11 ones that are out right now as a result of this act. And I feel very confident that there's one or two in there, maybe more, that can positively impact your tax situation, which will be an amazing part of this podcast, if we can find something positive for you. So that's it for today. Went over it real quick, one big, beautiful bill act. Hopefully that's helpful. If you have any questions, as always, reach out to my team and I. Happy to help. This is a tax planning strategy, so it's important to always discuss your tax situations with a qualified tax preparer before making any decisions, and lean on your professional financial advisors and money managers. So thanks so much. Have a great day. We'll see you on the next episode of the Enrich Your Journey podcast. Take care. Thanks so much. Bye-bye.